Now let's talk money. So I put in 1,000 today. First, whatever we're discussing, it's already regulated. Is it? Are you guys regulated?
No, that's where the product is regulated.
You are regulated.
Yes.
Do I need... So Ciscom doesn't need to be regulated?
No. It's
Tradium is regulated.
Yes,
so whatever
regulated.
Tradium does, it's fine. CMA will give it a tick.
Yeah, actually, I have a CIS. So we call it an approval. That's collective investment scheme.
Okay.
It's called Tradium Unit Trust Scheme.
So this is a collective investment scheme.
Correct.
Okay.
Yes.
Something similar to an equity fund or a balanced fund or a money market fund.
Thank you.
But now you guys are calling it an infra fund.
Yes, so we are trying now to coin out that product
Okay.
that we'll call now the infra.
Okay.
Yes.
Tell me about what will I make after I put in, let's say, 100,000 Kenya shillings? What am I looking to make back from my money?
So interesting question, and that's what everybody has been asking.
Yeah.
So we are saying like an IFB.
Okay. Good.
We'll give you probably between 14 and 18%.
Okay.
A special fund.
Tax free. Let's remember that.
Yeah. Oh.
So you have to put all those things. Put them for me.
Tax free.
Yeah.
Let's call a special fund.
Yeah.
We'll give you between that 18 and 20%. Again, tax free to an extent. After tax. Yeah, that's after tax. So we are here now. We are saying with what we are looking at the numbers out there, that they can be able to give a return of what is it, between 18 and 20% on the dollar.
Yeah.
If we convert that, we're at 25% easily. But now, how do you package that to be able to be consumed by the local mwananchi?
Yeah.
Now, this is going to be a first. Actually, maybe we needed to have mentioned that.
This is a first.
This is a first.
Yeah.
Maybe I think I work on firsts.
Yeah. Exclusive to Just Funny podcast. Awesome. Yeah.
Yes. So this is a first. Yeah. Something similar to what we are doing with Derek, a first, is why don't you have ETFs that are listed that you can be, instead of going to buy 5-10 shares in the stock market, why don't you buy into an ETF that has those 5-6 stocks, and you're buying one which gives you exposure to all the 5. So this is where now we are doing it. We are saying Derek needs money to be able to do the infra, for you to be able to get the 20 plus return if converted in Kenya shillings. And everybody now will not be running to get an IFB tax-free or a special fund. They'll be saying, I want an AI infra data center, data center. Data center, yeah.
I'm going to put it a t-shirt right there. Data.
Yeah. And this is on the fund management side of things. Remember, I'm wearing 2 hats. There's the brokerage side of things.
Yeah.
But on this, the fund manager using the Tradium.
I just want to know about now Tradium. So where does the money go? Who's your trustee bank, custodian bank?
So what happens as right now we are still in the process of creating that product.
Okay.
We've been having engagements with the regulator. It's been going on for
Still not ready.
No. So
if I have money now, I can buy.
private.
Why you
No,
guys-
it's
yeah.
private.
No, there's
private. You can come directly to. So you can come directly. That's what I said.
Yeah.
We've done a proof of concept through private.
Okay.
Friends and family. So we
must.
pitch it directly to, because we needed to prove the concept. We needed to prove, first of all, can people really get excited about this? So it's extremely very private. We have an investor roundtable. We usually do some of these things at the Capital Club, where we just meet and we discuss what's happening. So since we already and you see, like I said, because it's private, it's also very expensive. So it's 20K, and what happens with the private is that actually you own the infra. It's you own it. It's your infra. So it's the payback is purely lease income back to you as a landlord, right? But now what we've been doing and engaging with the Tradium and the regulator is now to make this a bit more democratized. A lot of people can be involved in smaller capital. We don't need to. Ciscom doesn't need to deal with 1,000 people, 10,000 people. Yeah. Like, how can we pool resources, channel them into this? So that product is in R&D currently, and we foresee that it will be available publicly around Feb. Okay. Around Feb, March, with compute as the first. And then AI GPUs, and then, like I said, around August, they will have modular data centers, which is a very interesting concept, but very high capex.
Okay. You keep talking about
as well.
GPUs. What's a GPU?
In the world of compute infrastructure, you have your traditional, computers that run on CPUs, which is central processing unit. So the thing about those traditional CPUs is that in terms of computation, they can only process one request at a time.
Okay.
Right. So that way they're just slow. So think of it as just your traditional car. It can just do a certain kilometers per hour, no matter how far you push it. Now, NVIDIA and NVIDIA came up with a GPU that now adds turbo to that machine.
A graphic
process unit. So now a graphic process unit is able to do multiple simultaneous computational requests at the same time.
Okay.
Right? That is why it's been very powerful with things like artificial intelligence, because as you can look at, artificial intelligence is intelligence not human. As a human being, as I'm talking to you, I am looking at you, I'm scanning the room. There's so many things I'm doing at the same time.
Yeah.
That is what traditional compute could not do.
Yeah.
Only do one thing at a time. Now with these GPUs, you have now turbocharged that machine to be able to do a lot more things at the same time, right? So now this GPU technology, now in terms of compute, has now enabled faster processing. Think about once we complete this podcast, there's an editor that needs to sit down and edit it and render. So GPU is able to now render that. If you are doing it traditional CPU, let's say rendering in 10 minutes, GPU cuts down that into a minute or two because it's super fast. Rendering interior design, think about mathematical formulas, think about research. Now think about chatbots, which is just a function of artificial intelligence, robots, IoT. All these things are going to be 100 times more faster by using this new set of technologies, right? Now, the painful part is we have very little footprint of GPUs in Kenya today. So it means Kenyan businesses don't have access to this turbo-charged, technology, and that's such a big disadvantage, right? Because XAI alone is doing $100 billion of this technology. So this is also just the painful and the emotional side of things that, again, if we don't invest in the infrastructure, Kenya and Africa will once again become a net consumer of technology. And it's happening, right? It's happening with ChatGPT. A research 2 years, I think 2 months ago, said that Kenyans are the most active on ChatGPT.
Yeah.
ChatGPT is not a Kenyan company.
It wasn't 2 years ago.
Yeah,
it was this year.
2 months ago. Kenyans, ChatGPT is a product of OpenAI, which is not a Kenyan company, right? Their data center or their infrastructure supplier is Oracle, CoreWeave. Those are American companies. So if you think about when you pay monthly subscription to use ChatGPT, that money ends up in whose pocket?
Not yours.
An American investor, a Japanese investor, global investor, not a Kenyan investor. Now, if you put that money in Ciscom Edge AI, and then a Kenyan company comes and builds their own version of ChatGPT, now when you subscribe to that platform, that money ends up where? In a Kenyan investor's pocket. As simple as that.
It sounds, there's a lot of ifs. So we're just beginning. Are you sure it's when? Because it sounds like a lot of ifs, which brings me to the question.
Yes.
What is the risk related to this? We all know there's no investment that's risk-free.
Absolutely.
And maybe this goes back to Eric because you understand this. You've been doing it for 22 years. What is the risk involved in this? And also, maybe you can also circle back and Derek can also join in. Data centers require so much energy. People claim that jobs will be created through data centers, but how much can this big building really do? Because I don't think they'll utilize a lot of human capital. They require a lot of water. There's so much ethics behind it that I'm not particularly sure. Would I, based on my value systems, this is something I'd want to get in. So Eric, tell me, what are the risks associated to this when the fund is finally launched? What should I be looking at when it comes to the risks? And then now Derek will talk to me about the next question.
Okay, good question. So I think with what we have right now, we have, 5 private data centers? Yes, and they are up to standard, international standards. And currently that's where we will host.
We are hosting.
Where Derek will be able to host. So if you're looking at that energy or water, there's already, a house that is ready to accommodate that. there's actually an empty space that we need to fill. Actually, we are selling that space.
Yeah, okay.
That's where now we need to go and do a capital raise. Yes. There's a product here we can create, and it can become a new asset class. So when you're doing an allocation as a portfolio manager, you are allocating and saying, I'll buy 30% bonds, I'll buy 20% shares, I'll buy 10% infra, I'll put 20% on cash on call, and so forth.
So what's the risk of me putting that 10% into this infra?
So the risk is there.
What could happen? What if these 5 data centers kick you out?
Okay.
What's the risk associated with this investment?
So we already have oversubscribed demand.
Okay.
In our stage of the business. So like I said, this is paperwork that we sometimes share to the private, our own company investors. We share with them. So like I said, securing demand is the fastest way. Is a fast way to mitigate. Because you need someone utilizing the infrastructure. So securing demand. So we only raise capital against committed demand. And this is a global standard. So as an example, just again 1 month ago in the news, there was this big headline that Oracle had secured committed demand from OpenAI worth $100 billion. So you remember that, right? So what that means is they'll comfortably finance $100 billion worth of compute and data centers because the guaranteed customer on that is OpenAI, and OpenAI is growing. Okay, so so for us we have a cloud platform and service provider. They're called Lyrid. It's a Silicon Valley Indonesian company that is setting up a zone in East Africa to serve Kenyan customers. So they have given us committed demand over the next 5 years, estimated at around $1 million. We have 3 financial service providers who now have combined $4 million worth of compute demand over the next 5 years. So every day we are looking for companies that have demand for that, either global that are coming to Kenya to expand their services here, or local that are operating in a very highly regulated environment like financial services, banks, investment banks, tier 2 banks, tier 3 banks, MFIs, payment gateways, fintechs. All these are the driving force behind the demand we have. So that is just the first part of it. The second part of it is that we collocate the compute in tier 3 data centers, and tier 3 data centers have everything in terms of redundancy or backup. Everything is N+1, so everything has backup power. They have substation from the main power provider, but they also have backup generators. They have UPS. They have solar in place, because in the world of cloud, you have to guarantee customers 99.999% uptime. Because when this goes down, it means you cannot access your banking app. Then how do you do transactions? So tier 3 level of certification ensures that at a data center infrastructure layer, the infra or the compute or the GPU or the server is always running 99.999% of the time. Okay, so now the other way we work extremely very hard to make sure that the infrastructure is going to generate value is that we, apart from just doing infrastructure as a service, we as Ciscom are aggressively innovating value-added service other than infra. So as an example, we have some of the most disruptive solutions around agentic AI use cases. So think about financial services have demand for customer lifecycle management. They have demand for automated reconciliation. They have demand for data analytics. They have massive demand for now training that data and having their own AI agents that now replace human beings to be able to just do this around the clock. So those are the indirect use cases that guarantee or that push up utilization of the infrastructure. Now, finally, we also get commitments from the existing local data centers in terms of pricing for their own real estate, to just ensure that they will not wake up tomorrow and say, a kilowatt of electricity is now $500. So these commitments go into years, just make sure that at least on our own the cost structure is very predictable. Yeah.
If I'm diversifying my portfolio,
Yes.
so I should have something in the infra fund.
Yes.
Should I also be looking at getting shares in KPLC? should I be also looking, or energy companies globally, if I want a bigger piece of the pie?
Correct.
How should I come in? Yeah.
Absolutely, and that's why structuring these products for sustainability is very important. So, like I said, digital infrastructure is also an ocean of possibilities. So today, like I said, we're doing purely compute. So today, if you invest, you're buying a compute, you're buying high performance server, you're buying a GPU. You get an ownership certificate of that GPU. You dedicate it to a cluster. We manage it for you. You get monthly fixed leasebacks as of today, right? But as we continue structuring the product, we will move now into data centers themselves. So we'll create a data center fund. So today we have a compute fund, private compute fund. Then we'll move into data center fund. And we actually now even exploring how we can expose sophisticated or just Kenyan investors into now the energy powering all this, because cloud and AI are one of the massive drivers of energy. In the US, they have even gone back to nuclear because their grid cannot satisfy the demand for energy that AI workloads and AI infrastructure has. So as a matter of fact, on 4th December, we have a conversation at the Capital Club with Mr. Eric as well, and the CEO of Kenyan, and we have some other guys from Best Energy Optimization to look at how is the energy generators looking at the AI opportunity. What are they putting in place to make sure that, because Kenya can actually position itself as the biggest green energy provider, and this can attract other data centers other than Ciscom and other than the existing data centers. So you think of it this way, because of the excess energy we have, we attract Oracle as an example. We attract core with that houses OpenAI, and then OpenAI all of a sudden is running their workload inside the country. These are 1 gigawatt data center demand. Okay, so today, as an example, we are co-located at IX Africa, and they are, I think, they run 4 megawatt of IT load, and they're expanding to be able to get to 22 megawatt of IT load. So then, in terms of innovation, we are really thinking about, do we create an energy token product and put tokenization, blockchain tokenization on it, so that someone can diversify in infra, compute, data center, energy, and even a startup fund, the AI startups that are going to utilize all this, so that we create an ecosystem of digital infrastructure investments that are diversified, sustainable, but most importantly, retain value inside the country and her IROI.
Maybe even data center real estate trusts and stuff like that is where this is going to go to. You said it's still open to the private investors.
Yes.
Where do I go?
So
how do I reach out?
So you just reach out to us at Ciscom, and www.ciscom.africa or .tech. You get us. We also host these monthly engagements at the Capital Club, where we tell you a bit more about what we're doing and the ticket sizes, right? So in that case, like I said, you'll be buying compute that is supplying a certain client.
And 20K USD is the minimum, because you said there are different ticket sizes.
Yes. So it depends with the compute requirements of that customer. So so currently we are doing 20K because the compute requirement is high performance as well as storage. Okay, so now for that, it's like I said, fixed leasebacks. So remember, the client is paying us every month leasehold. So we net the costs of OPEX and just managing the infrastructure for you. And then for 20K, you're looking at 280 to 350 USD per month. Okay. In
my wallet.
Yeah. Once the infrastructure, the infrastructure is running, because remember, there's a customer that is waiting to sit on it.
Out of the 20K USD, I'm getting the 280 USD per month in my pocket.
Yes. You'll come in through the investment roundtable. You'll invest in a node. A node for us is the equivalent of a compute cluster. You'll get an ownership certificate of that node. So you'll dedicate it to our cluster. So in this case, we become your managed infrastructure partner. Running custom operations, configuring the customer, and making sure we collect money from the customer. Okay. Then so now the monthly leasehold from the customer less costs of running the infrastructure is your share of the revenue, and that is deposited fixed every month in your wallet on Cisco.